So long ago, I came across this guy, and we were good friends, or I guess we still are good friends, and he introduced me to this concept about how to acquire property. So we're going to stay in that same space. Okay. And in a different angle,
okay.
And I thought it was like some kind of trickery or whatever. And I thought it was pretty cool. So what I want to ask you is the pros or cons of tax liens?
There are pros and cons to tax liens. The good thing about tax liens, when you pay that, you pay a percentage of the tax that's owed on the home. And you are able to take the lien and hold the lien yourself. They have up to about 2 years to come back and pay that off, and then you assume the property. A lot of people get into tax liens and say, hey, I want to just go ahead and purchase the home via the tax lien, and I hope that they pay it off so I can gain about 25% on the monies that I invested in there. But then sometimes you're stuck with that property. Mm-hmm. So now when you're stuck with that property, you got to pay the property taxes and the fix-up costs.
Right.
A lot of people use it as to fix up. I have a client that's all he's ever done just about is purchase a home via tax lien. And there are pros to it that they're able to acquire a property because nobody else wanted it just by paying the taxes off that was owed. And then now they can take a loan out on that property, fix it up. They've had that property for 2 years. The mortgage company says there's value there that they can do a 203K loan, which is an improvement loan, and fix up that house, and then they can have the house for their personal or for their business. They can do that. The downside, like I said, you could possibly be stuck, that you get stuck with that property, or you lose that property if you're trying to own that property, because the person comes back and says, I want to take that property. And then if you're doing that, you have to have it's set up as a business, because if it's on the personal side and you purchase that and you own that and you paid the taxes, that goes on what you call your itemized deduction. One, you've got to be able to itemize. Two, if you're not able to itemize, it's only capped at $10,000. If you're married, $5,000 married, filing separate. So at that point, you're capped at that between your withholding tax that may come from your W-2 estimated taxes, real estate taxes, what we're talking about, or sales and use tax, different things like that, or any back taxes that you pay. You're capped at $10,000.
Right.
So we're hoping that once the taxes expired, they get rid of that. People in New Jersey, for instance, are suffering that some of those taxes in New Jersey's properties are like $20,000 a year. They're only getting $10,000 deduction.
Wow. Yeah, but something that you said earlier, just want to kind of circle back to. You said after a 2-year period. So if that person that previously owned the property, if they come in 25 months later, they lose.
Yeah, they should lose at that. Unless
okay.
the laws are changing, they're going to lose. Each state is different, but yeah, they're going to lose. Okay. But you're going to gain a percentage, a healthy percentage off that property if you purchase that tax lien. If you purchase it for $10,000, you're going to get a good tax benefit. Gain ROI on purchasing that tax lien if they come back within that time period.
Right. So tax liens are just everywhere throughout the U.S.
Yeah. There are some states don't allow it, but majority of states do.
Okay. Yeah. Good deal. If you enjoy this content, if you like it, please think to tap the like button below, subscribe, and share this video with people that you would think would be interested.